Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage. I'm a certified mortgage advisor, and for over 20 years, I've been helping people come up with the best strategies for homeownership. And if you're the type of person who just wants the headline without needing a finance degree, you are definitely in the right place. I'm going to go ahead and start with the first minute or so for my friends who just want to know what time it is. And then stick around if you want a little bit more. We'll talk a little bit about how the clock works. And if you really want to understand why rates just made a move this week, stick around because this one actually matters. All right, here's what you need to know. Mortgage rates actually improved to start the week, and honestly, it had very little to do with housing and a lot to do with global headlines. According to Mortgage News Daily, national average rates are sitting around 6.53 for the 30-year fixed rate, 6.07 for the 15, 6% for the 30-year FHA, and 6.01 for the 30-year VA. Now, remember, everybody, those are national averages. This is not a rate quote. Your rate's going to actually depend on a lot of stuff like your credit, your down payment, the loan type. But directionally, that's an awesome improvement from where we were just last week. Now, on the housing side, new home sales dropped pretty darn sharply. They're down about 17% month over month. And I know that sounds like a really big deal, but this is signed contracts, not closings. And let's face it, the weather absolutely had something to do with that. So this is more of a pause, not the beginning of a collapse. And at the same time, pending home sales, which track existing homes, they actually rose 1.8%. So buyers didn't disappear, they're just being a little bit more cautious. So here's the simple version. Rates improved, housing slowed a bit, but demand is still there. And if you're thinking about buying or refinancing, well, we're getting closer to a window again. Now, if you just want to know what time it is, your work here's done. Thanks so much for stopping by. And as always, feel free to reach out with any questions you might have or share this with somebody who could just use some good, honest advice. But hey, before we go, I hope I can count on you to like and subscribe. It really helps me grow the channel, and definitely let me know if there's any other topics you'd like to hear more about. All right, now let's go ahead and connect the dots a little bit here because this is where most people get it wrong. Rates did not improve because housing got better. They actually improved because the market got a little bit less nervous. Over the weekend, things escalated with Iran, and there were threats. There was talks of shutting down the Strait of Hormuz, of ending energy facilities. And if that happens, oil spikes. And when oil spikes, inflation spikes. And when inflation spikes, well, mortgage rates go up. But then this morning, we actually got a shift in tone. Talks were reported as somewhat productive. Attacks got delayed, and suddenly the market said, okay, well, maybe this doesn't escalate. And just like that, oil dropped, stocks rallied, bond yields came down, and yep, you guessed it, mortgage rates improved a little bit. Now, this is the part that most people miss. Mortgage rates are not just about housing, they're about risk. When the world feels risky, rates generally go up. And when things calm down, rates generally come back down. And right now, rates are being driven as much by global headlines as they are by the actual economy. All right, let's go ahead and build the clock a little bit here because this is where you start making smarter decisions than the average buyer. Yes, new home sales dropped, but when you zoom out, the broader trend is actually pretty darn stable. The recent 3 month average hasn't really changed much at all. So demand didn't fall off a cliff, it just kind of got interrupted. Now let's talk about inventory because this is where context really matters. We're sitting at about 9.7 months of supply on new homes. And at first glance, boy, that sounds like a lot. But here's the part most people forget. Back in the crazy sellers market in 2021 and early 2022, we had less than 2 months of supply of homes. And that's why we were getting 10 plus offers way above ask price, waived inspections, and all that chaos. Now, a normal healthy market, what is that? Well, it's typically around 5 to 6 months worth of supply. So what does 9.7 tell us? Well, supply has improved. Builders have actually caught up a little bit, and buyers have more options. But here's the key. A really big portion of that inventory, it's still under construction, which means it's not like finished homes are just sitting around and not selling. The translation here is this is not a crash, it's just a rebalancing. Now, pending home sales, they went up, and that tells you that buyers are still watching, they're still shopping, and they're still ready. They're just waiting for some confidence. And what creates confidence? Well, lower rates, stability, and less chaos in the headlines. Now, this is a big one. Right now, mortgage rates, they're heavily tied to oil prices, inflation expectations, and global conflict. So let me simplify this a little bit. If oil goes up, inflation risk goes up and rates go up. If oil goes down, inflation cools and rates generally come back down. And this week, well, oil's dropped, and that's why rates have improved. So let's go ahead and make this real for a second. On a $300,000 loan, a half point improvement in rates is roughly $90 to $100 a month. That is real money. So when people say, I'm just going to wait, what they're really doing is they're betting on rates actually going lower and home prices going down or at least not going up. And historically, that window does not stick around very long. So here's the truth: you don't need perfect timing, you just need a plan. Buy when the payment makes sense, refinance when the opportunity shows up, and just stop trying to win a timing game that nobody consistently wins. So, to start this week, I agree with floating, but pretty darn cautiously. If bonds break higher and the 10-year moves towards that 4.2% range, we could see another leg down in mortgage rates. But boy, this market can reverse quickly. So you've got to stay engaged. Now, if you want help building a strategy, not guessing, that's exactly what we do here. No pressure, no sales pitch, just a plan. And as always, if you're military, law enforcement, or a firefighter, you're a local hero as far as I'm concerned. Make sure you check out the Home Foundation. We're working really hard to make homeownership more affordable for those who serve our communities. And hey, also make sure you check out my latest Home Foundation interview, where we actually learn about the upcoming Flags of Valor event that honors our heroes that have fallen since 9/11. This one's a really big deal, my friends. There's going to be over 7,400 flags put up with precision to honor those heroes. And you're not going to want to miss it. Hey, everybody, I'm Doug Shoemaker, and I'll see you next week.